Hey, good morning. Let's go over today's trade plan. So heading into the open yesterday, we knew that we had bullish time frame alignment above 23.5 to 26.5, and that theme of bullish time frame alignment continued in the overnight session, and we saw an upside breakout for a test of the 52.5 to 54.5 resistance, where responsive sellers have been active on first test. Now, at this point, heading into the open, that bullish time frame alignment is still intact, but the risk or the challenge at these higher prices is that we have the Fed announcement due tomorrow, and that could limit the range potential on the day. So on the upside, we have pre-market resistance at 52.5 to 54.5, which is an area that has been tested in the overnight session, and we found sellers there. If off the open, we continue to see broad market strength and sustained upside momentum, then given the bullish time frame alignment, we can get a breakout above that area for a test of 58.5 to 60.5, where sellers could still be active on first test, and then above 60.5, the next area of resistance is at 68.5 to 71.5, where sellers are very likely to be active, and by that point in time, we would begin exhausting the range potential on the day. So getting back to what I said earlier, the challenge for today is that we have to balance the bullish time frame alignment with this idea that we have the Fed announcement due tomorrow, so the upside could be limited to either the initial resistance zone or somewhere near the 68.5 to 71.5 zone. And then in order for the market to continue heading higher, we would need to see continued broad market strength and sustained upside momentum in real time. On the downside, the aggressive area of support is 44.5 to 46.5. Holding above that zone tells us that we're dealing with a stronger market, and that can lead to a test of the initial resistance zone. A break below pre-market support would bring the 39 to 42 initial support zone into play, and that's a spot where buyers can defend on first test, and then from there, if the market can push back above 44.5 to 46.5, that would serve as a bullish confirmation and bring the resistance areas above into play. A breakdown below initial support would signal short-term weakness and bring the support areas below into play, and given that bullish time frame alignment between the short term and the intermediate term, buyers can be active at pretty much every support area on the way down. So below the initial support zone, buyers could step in at 32.75 to 34.75, and then we have better support at 27.5 to 29.5 and 23.5 to 26.5. Now, this area is one large area of support that I've split into two smaller zones so that we can actually execute at that area on the day time frame. Because making this entire area one big zone wouldn't really help us execute, since the stop loss would have to be too big and the reward to risk probably wouldn't work out. But in the event that the market does start heading lower, we know that this is a larger time frame area of support from 23.5 all the way up to 29.5, and by splitting it into two individual zones, we can consider executing there at both of these smaller zones. So 27.5 to 29.5 would be a possible long setup with the stop loss at 26.5, and if that stop triggers, then 23.5 to 26.5 would still be its own proper and valid long opportunity. And that's the bull bear zone. That's the larger time frame balance breakout area. So on the larger time frame, that's the spot that buyers need to hold in order to keep this bullish theme intact. So in the event that the market does get exhausted into those lower areas of support, it's very likely that buyers will be active there. But given how strong the market's been, ideally we'd like to see ES holding above initial support. And if the market's really strong, then it could even hold above pre-market support and make its way up into initial resistance and possibly higher into the 68.5 to 71.5 zone or somewhere close to that zone. I think given that the Fed announcement is due tomorrow, if you are holding a long setup through initial resistance, then exiting even ahead of 68.5 to 71.5 would make sense. So that is the market context heading into the open. Our focus is still going to be more on the long side, and we are going to exercise caution on the short side. And that means that in the current environment, it makes sense to be more aggressive on the long side and just be more conservative on the short side, or avoid short setups that don't really have a lot going on in real time. So that is the plan heading into the open. Let's see if the buy side can maintain the control that we've seen recently and in the overnight session, and we'll take it from there.